Hello and welcome to the Wavy Tunnel Pro Market Outlook for the week that will begin 20th of April 2026. Right, so before we start, please read this disclaimer about this presentation and that it's for educational purposes only, and anything that we've done previously with regard to performance does not construe that this can be repeatable. So once you've done that, we can start moving on to what is, I'm going to be careful with my words now because I was going to say outcome, but I had a pretty clear picture on Friday evening what I was going to say today, and then that's all being blown out the water. So let's have a look and see. There's going to be no economic data releases on Monday, but I think the market is going to be preoccupied and consumed by are we, aren't we in the Middle East? So I really don't think this is relevant until we start getting back into normalized markets, because the volatility that we've experienced, and I'll show that when I go on to the equity futures and what we've experienced in the last 12, 13 days, and try and make sense of what is going on. So that there might be some focus on earnings, and particularly the bigger companies, to see how. Now, again, this is first quarter, so what has happened in the last 6 weeks is probably not going to be too much of a factor, but it's still, this is where we start to see the nuts and bolts and how everybody's performing. So nothing on Monday, Tuesday, Wednesday, Tesla Wednesday, that should be interesting. And let's have a look and see if there's any big other ones. Markets always look at Caterpillar. Intel will always be interesting. And then that'll be it. Right, markets. What have we got? What are we expecting? This is difficult because before I put Wavy Tunnel on, I'm just going to start with the daily on the euro. Now, what is going to happen on on Monday in European time will be, you will know in America, at about 6 or 7 o'clock tonight, and the gap that this is going to, so we're going to have a gap without question, and this is going to come down. So there's the first sight. So the question is, how big is this going to be? So trying to guess or preempt, don't wait for the market to open, wait for the dust to settle. All I'm going to do with you here is to try and map out some levels where we could see, and we got to then and see where this market's going to come. So when you look at this picture, what's the first thing that jumps at you? So the first thing that will jump at you will be this area here, which is where the wave and the tunnel are meeting. Now, you can see already that that was the close on Friday, and this market now is going to have a bigger one. Do we come in here? Do we come down? I don't know. I really, really don't know. So frame out your charts. Look at the levels. So look, immediately have a look in this 116 area. Again, we will be susceptible and vulnerable to we are or we aren't. And I think the market's getting a little bit tired of this now. And so we need to get back to normal trading regimes, because this is just insane. So I'm probably not going to dig too much deeper into time frames today. I'm just going to look at broadly. Have a look and see what happens between 16, 16 and a half. If we hold this level, then we will have a defined range. And the defined range is going to be here, and you can see what's happened across the top there. So why do I say that? Because all of this break, retest, I talk about this, and I will continue to talk about this. Retest, retest, retest. So now we come back into this box, and then you have to see how this be. So this will either become your range here, or we'll break, establish, come back, have a look, and then this will then become your new range. And then the broader context is then obviously the tops. So map this out on your higher time frame, look and identify the levels, and then move into, for the purposes, then during the weekly ones that I do, I will drill down and that, but we at the mercy of gaps when this market opens in the morning. So just for the sake of good order, so 18, 18 and a half, topish, 16, 16 and a half, mid-range, you get to decide, and then do we come back down to 12, 12 and a half, or do we extend back to, so just make a note of these levels. Again, you can see how the Fibonacci tool has quite nicely, all these levels are congregating around these Fibonacci levels that we've been processing, and we've got the wave and the tunnel, which is our first port of call, and then this will determine what happens on the awesome oscillator and the bunches. Let's have a look and see what it's going to do in sterling. And it'll be the same. It'll be the same. So I can see down here, so that was where we started. Breakout one. And now you're going to have two things that are happening here. So we obviously had this, which was our primary move, and we would be expecting to, for me, once we've completed this correction, to go and break the highs again. But all bets are off now because of what we've experienced over the weekend. And again, so Saturday's news might be undone by Sunday's news. So it's now midday in Europe where I'm doing this, and I haven't heard anything to the contrary at the moment, but it's back closed. They're sinking oil tankers. Markets are going to be very disturbed about what's going on, and the information and the moves that we're experiencing are just causing havoc and they're going to be chopping up people. So again, just frame out your levels, and you're going to trade box to box, and then using the wavy tunnel as the additional tool, because you can see, look, going back here, there we go, and you've got the wave and the tunnel merging right here. So when we open, we're probably going to gap back down into the wave and the tunnel and into this area. We then need to see how the market reacts to it, what position is going to be, and the impacts that that's going to have on the market. And then that would be our immediate range. Back above here, we go back to the highs, we consolidate here, then you wait for the break to come, and then wait for the retest, next look, and then off you go again. And then the same thing will happen in here. So these are your levels. We closed above 135. We're probably going to open close to 134, maybe a bit lower. I don't know. I'm not here to speculate. It's for me just to frame out what potentially could happen and the areas where you need to focus. And this is why I always say on a Friday, you know, I was quite surprised by the moves on Friday, because it was, you can't go into a weekend um, with what we had and and just leave yourself exposed to what could and what couldn't happen from a retail perspective. Right. So Japanese yen, you know what I'm going to talk about. We're probably going to blow through 160. They're open. So we're going to have a look and see. So now what I would speculate is going to happen by the Bank of Japan. They won't come in immediately. They'll have to do an appraisal of the impact of the news and what it's had on the markets. So they won't come. Won't come out swinging. They'll wait to see where the market wants to go, to what extent it wants to go, and how people are going to respect this 160 area. And so that also now is coinciding with what's going on in the wave. So I wouldn't be surprised if they push above this level, and then we'll get to see. But then this become your pivot. This is going to go into 45-degree angle. Again, you can start seeing that it's starting to slope up. You would have marked out this range here because it's a consolidation. So there's nothing to do in this until we get below there, retest, or get above there, and then you take your life into your hands with other factors that will be in play on the Japanese yen. Let's have a quick look at the Aussie. I won't go into too many. I'll do a deeper dive tomorrow when markets open, because then we will know where the gaps are and what and how this is going to play out. This is the Aussie. Let me just pull this now because I need to break up one trade. There it is. So what I'm going to do with this one is I'm going to measure this full move, and you can very, very clearly see now on the Aussie. Again, this one should probably gap down, so you know what's going to happen here. We're going to come into this level here. So keep an eye on this level here. That's going to be first area of interest. It'll probably come back down into this whole congestion area here in the wave. So the wave is there, possibly fill the gap. We don't know. I will tidy this up when I do one tomorrow when the markets have opened. So just make a note of these levels, and these levels trade between the boxes, and wait for the wavy tunnel setups to confirm or reject your thesis on how you expect this market to play out. I just want to see something because I can see it here, and there was an extent. So market is going to struggle above 72. So I'm going to say 69.5, 72 initial range. Possibly a deeper move back towards the tunnel. If we break that level, we're going to extend down to 64 again. And then we can see how this is all going to play out. Again, to go into too many, let's just look at an emerging market. So the Mexican, to see how that's possibly, because this will then also, because what's going to happen is you're just going to see dollar strength. And so we probably going to get a move in this one back up into this area here. And what does that coincide with? We are just a good example of, while we're looking at it, so for educational purposes, how you can see how you pull that price to wave, look for your setup in lower time frames, and you get the nice trade. Also, when you've broken out of the markets, and how you get to 45 degree, how the wave becomes your leading indicator and your trend following guide. So every pullback into, again, this is on a daily chart, but this could look the same on a 1 minute chart. And then you just look for that pullback in there. You're not necessarily selling into the wave unless the setup is there on the lower time frames, but you can certainly get the breakout trade. And again, you get the consolidation. So this is good. So you can see you're waiting for the break, the retest, and then you go again. But so this is another one that emerging markets people look at. I traded this for many years, so I know it very well. And so this is going to come back up to this level here, and possibly extend into this area here. But again, we are susceptible and vulnerable to are we, aren't we? So I'm not going to belabor the points. What I will do as well, because we're really at the mercy now of what's going to happen with the peace or no peace. Right, I made a note on moving over to futures and the S&P. So in 15 days, we went from 63.50 to 71.03. Insane. It's summed up here in the NASDAQ, which was similar, where you had nearly a 16% move in 12 or 13 days. It took 152 days to go from that swing high to that swing low, and we undid all of that in 12 or 13 days. That gives you some insight into how market is positioned and what markets want to do. They want to buy the dips. They've been proven for the last 5, 6, 10 years. You buy the dips and you make money. I'm not going to talk about how I think this has been, monetized and manipulated by what's going on in politics, because I really think that's a factor as well, because people are front running this. It was like when the markets were trying to come down and we were talking about capitulation and, the end of civilization. This market didn't come down to any great degree. And I made these observations when I was watching it. It was like the whole market was either positioned short, or there was a big vacuum cleaner down here who was hoovering up everything and not letting this go lower because they knew something. And you can draw your own deductions on this, but that's what we experienced. Any red candles in there? One little one, tiny. And then you can see how we straddled this area for a couple of days, and then it was off to the races. Yes, there was a lot of option expiries in there Wednesday and Friday, but people are going to be crying because it was unprecedented call buying in these markets. So where does this market I've got no idea where this is going to open. Again, I will just be referencing the wave and the tunnel to see for levels. I've got my fib levels on, so I've got now a swing low, a swing high, and even technical trading becomes quite difficult in these markets because of the speed and the aggression of these moves. And so again, I will tidy this up tomorrow, but this is going to be damaged now. And again, we will see how the market behaves when it opens. Again, pointless going down into any lower time frames because this is going to be a massive gap when we open. Similarly on. So use the framework that you've been given, monitor, measure those, the fib levels, the retracement values, look for confirmations in price action, keep positions tiny, 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 because you're going to get explosive moves with denials and confirmations, and this market can ramp and just gap 100 points at a time. I experienced that a lot last week when I was trading, and the way I was trading this last week is I would go into my chart, and when I would look at key levels, and I would literally put my orders. I would look at this, and you would think that I'm being silly, and just I would put them 100 points away, 150 points away, and I can't tell you how many times they were triggered. And you go, as it touches it, and you go straight into a profit. My system brings it to break even plus 5 points straight away, and so it becomes a non-losing trade. And this is what you've got to do. But here is a lovely example on this 1 minute on how you get to trade with trend, and what I talked about on how you look and manage the wave and the 45-degree angle. Yes, so you could extend into fill the gap, excuse me, and that's why you have a line across your flag so that it becomes a breakout trade. You're not necessarily buying there or there. You'll all have your own slight different methodology that will help you and guide you. But this is what you do. You use these tools that you've been given, have a look to see where we are, where we're at, where we could extend to, and then just play the individual pieces. So let's have a look. So all the euphoria around oil and the 10% depreciation, and down we went, and this is all going to be undone. This is all going to be undone. So the price that becomes a problem now is going to be that price there. And like I said to you, I said I think last week, I said we're going to go into a new range, and I think we've seen that there. So we can see that this market is going to struggle to get below that line. At the moment, as we speak, I don't think it's going to struggle to get beyond that one. And so we'll have to see what happens when the markets open a little bit later. I will tidy these all up. I'll leave Monday for a couple of hours to let it settle down, so closer to the New York Open, so that a lot of price action has come through before I look at it, or look at it late after Monday and do a preparation for tomorrow. Is not going to probably be a day to trade because of the volatility that we could have. Just monitor and see what is going to happen here. So similarly, we're going to get, this is probably going to gap higher, and again, I just look at behavior and just to look at, I measure things to see how things are playing out, because I can see a pattern on here where the market is it's that is starting to look like that, and this whole structure is starting to look like this whole structure. So observe, but I would think that gold now could spike up. You got this, fill the gap, you got all this, and so we could be going back to the highs. But again, this is not trading advice. This is just me looking at levels to see where. So let's, like I've done with everything, just frame out the areas where we are likely. So I would say this is your range for the gold. There it is. So very difficult to trade. I don't know how much that has helped, but just keep yourself very, very. I would stay out tomorrow. Let everything settle. Let everything calm down, because it's going to be tremendously volatile and choppy. So I will tidy up again at the end of tomorrow and give you a framework to see how we're going to play out and what it would look like for the rest of the week. So stay safe and see you soon.